Hello, everybody. Welcome to our investment opportunity webinar, and we're going to be focusing on Williams Corporation Capital. Now, very exciting presentation. You have myself, Matthew Horncastle, and our funds manager, Richard Carr, that's going to be presenting this product to you today. Our presentation will take approximately 30 to 40 minutes, and it will be really fun and informative. Now, every great presentation needs to start with a legal disclaimer. So the legal disclaimer for today's presentation is written down. You're welcome and encouraged to read the full presentation that was written by our legal team. But just in brief, as a summary, we're not financial advisors. We're not giving individualized financial advice. We do everything we can to make sure what we present to you is true and accurate. But please make sure you do your own research, make sure you read the documents yourself, do your own research, seek your own advice before you make an investment decision. I'll just leave this for one more minute, just for anyone that is running their eye over the legal disclaimer that was written by the lawyer. And obviously, if you're watching this presentation as a video, you can pause it and read it. Now, we want to do a Q&A. That's normally one of my favorite parts about these presentations, is really getting into your questions. So you'll see a chat bar on the bottom right-hand side. As we're going, anything you think of, drop it in the chat bar. And we'll do a really good Q&A session at the end of this presentation. And we want to make sure your questions are answered. So just anytime you think of something, drop it in that chat bar, and we'll do all of our questions at the end of the presentation. So today's agenda, you're going to have an introduction to myself, the speaker, Matthew Horncastle. I'm going to present who is Williams Corporation, which is the developer presenting this investment fund. We're then going to have an introduction to Richard, our funds manager, and he's going to present to you Williams Corporation Capital in detail of how it works, and then we're going to do our Q&A session together. It's going to be really, really effective use of your time. Quick intro to me. I believe you need to validate your source of information. My name is Matthew Horncastle. I come from a family where everyone is in construction. Mother, father, granddads, cousins, aunties, uncles. Very, very interesting Christmases. I'm a qualified builder, so I've served my time in the industry from the ground up. I've been a business owner since 2011. I'm a thought leader in the business space. I'm always commenting in the online community, as well as in newspapers and TV and things like that. I live in and invest in Williams Corporation properties. So the product that we're talking about today, I'm a very, very large customer of the company. But my largest claim to fame is I'm the co-founder of Williams Corporation, which as of today is one of the largest privately owned builders in New Zealand. So let's talk a little bit about Williams Corporation. Who is Williams Corporation? Williams Corporation is a residential property developer. We build houses that are affordable to buy, affordable to live in, affordable to maintain, where you can live, work, and play. The original company that formed Williams Corporation was established on the 6th of June 2011. So we've been in business for over 12 years. And we currently have a goal of building 500 houses a year in New Zealand with excellence. And we've achieved that goal for the last 2 financial years. And we're on track to achieve it this financial year as well, which is really, really impressive. So this is just a little bit of stats about the company. Last financial year, we delivered 503 houses to our customers. So this is physical settlements received with a value of $373 million. So that's just 1 year of construction and delivery. In our career, we've delivered 1,811 houses to our customers, and we've done over $1 billion of sales and delivery. So in our 12 years of business, we've really achieved some impressive milestones. This shows the average development time. So the average Williams Corporation project would be a block of 14 to 16 townhouses. We've done development significantly smaller and development significantly larger. But when you look at our entirety of our book, when you go on our website, there's a fantastic page called Completed Developments, and you can literally just scroll through till your hands hurt. But this is our average timeframes that we work within. So our average time to achieve our consents is 7 months. So that's resource consent, building consent, subdivision consent. We have all of the services, any crossing consents, everything, right? So that takes 6 months. Now, we don't normally present a product to the market in the first 3 months of that consenting stage. So for the first 3 months, the public does not see the development. We then have, on average, an 8-month construction phase, and our average total time frame is 15 months. But as I said, the first 3 months, we normally don't show that project to the public. So you'll quite often hear a Williams Corporation client consultant, when they're going through the sales process, say, on average, from when you sign the piece of paper, the contract, to when you get your keys, we aim for a 12-month delivery window. And those timeframes you're looking at for a company of our size is very, very, very impressive. We're obviously always trying to improve and always trying to get them faster, but that's really good on an industry average. So this is a little bit of the history of our funds. Now, in my opinion, I'd never seen developers in New Zealand use wholesale funds before Williams Corporation the way we do. We were really the first that I'd seen that created the entity that sat as a supplement to such a large business. There were project-specific funds created, there were finance companies, but I'd never seen what we had done. And Rich is going to talk a little bit about that soon, but I want to talk about a few key metrics about our funds business. So since we created our first fund, we've raised over $271 million. We've returned over $144 million to our investors. So that really shows the liquidity that we've provided to those investors. We've paid out over $36.4 million in dividends, and we currently have 4 wholesale funds open. Probably the really important ones there, they're all amazing numbers, but the fact that we've raised $271 million really shows the quality of the offering. And the fact that we've paid all of our investors a 10% return gross, we've dispersed that $36 million of dividends is really, really impressive. So I'm very, very proud of this screen. We've worked very hard to look after our investors and achieve these outcomes. One thing that makes Williams Corporation special, we come to work every day so we can come to work tomorrow. We're people that love what we do. Coming to work is the prize. Running Williams Corporation is the prize. And so right since early days in the business, we've had a 100-year plan. And essentially our 100-year plan focuses on these key points. The world's population is going to continue to grow. So this is going to have a strong demand for property. We focus on our product, which is affordable to buy, affordable to live in, affordable to maintain, where you can live, work, and play. We want to control our own finances with instruments such as Williams Corporation Capital. So it's about making sure that you always have a well-capitalized business. We want to design our product so it's able to be built and it doesn't have maintenance liability. So we're really focusing on that buildability and that bulletproof design. We want good people. When you meet people from Williams Corporation, I'm really proud of our team. We've got really great people. And we have a culture of continuous improvement. So continuous improvement, we say get 1% better every day. So it's always going through, what am I doing today? How am I doing it? And how do I get 1% better? And that culture of continuous improvement is really special. And as far as politics, we really believe in free markets, free people, and property rights. So we want to be encouraging people to own their property. We want to be encouraging people to be in business. We really believe in that free market system, and especially around the property rights. So that's something really special and something that I'm very proud of. And I think it's been a huge part of our success is that we always have a 100-year plan for the business ahead of us. And this is just the bullet point version. We have a lot more detailed version of this plan, but it's something that makes us special. So why do people buy houses from us? For a relatively new business entering into a relatively competitive industry, the New Zealand property industry, and achieving disproportionately strong results, These are sort of a few reasons why we believe we outcompete the market. And this is as far as why the customers choose us over other products. Our homes are low maintenance, they're exceptionally well built, they're well located. We don't have price escalation clauses in our contracts. They're turnkey, ready to move in. We have fair sunset dates that protect the customer. We make the process easy, and we have generous floor plan sizes. So you can never break things down to a silver bullet. It's always hundreds of little things, but these are a few key things we do really well, which distinguishes our offering from other offerings in the marketplace. So let's just have a look at some of these houses. Beautiful. So we do all of the enhancements. So we do the landscaping package. You can see the Williams Corporation pergolas showing that front door. New Zealand made letterboxes so they don't rust. What I like about this image here, you see the permanent materials, so the aluminium weatherboard and the brick. You can see that this is going to be low maintenance for the customer. We've got concrete driveways, electric vehicle charging points. Like, we just do the little things right. These are native trees, which means they have a significantly lower chance of dying. Yeah, we're really good at what we do. Inside. So Williams Corporation kitchen as a standard, we provide the fridge, microwave, oven, cooktop, dish drawer, washer dryer combo. So we're really making it easy for the customer, and the color scheme looks lovely. Engineered stone bench top. So summary of Williams Corporation, we're an honest company. We've been in business for 12 years. We're one of the largest builders in New Zealand. Our homes are attractive to owner-occupiers because of the quality and the location. And our homes are attractive to investors because of the returns. And we focus on property that's affordable to buy, affordable to live in, affordable to maintain, where you can live, work, and play. So now I'm going to hand you over to Richard Carr to present Williams Corporation Capital. Richard.
Thank you, Matthew. Hopefully this is all working as expected. I am the fund manager for Williams Corporation Capital. It's an absolute pleasure to talk to you all today. And it's been a really rewarding experience dealing with the fund and dealing with Williams Corporation. As Matthew has said, we're a business with fantastic ethics, great moral compass, delivering an exceptional product. And Williams Corporation Capital really is a key part of that. As the fund manager, as Matthew said, it's important to get to know me just a little bit. I've got a background in commercial real estate as well as residential real estate and economic development. And I'm a graduate of economics and statistics from the University of Wellington. And I absolutely love numbers. I love data. I love telling stories, and I love debating what's going on at the moment, particularly in the economy and particularly given what's happened over the past few years. So as an open invite to everybody in this seminar, feel free to give me a ring, either as an investor, obviously, or just to discuss the state of the nation and the economy at large. We believe that really informing people, talking about the market, is the start of that journey towards investing, and obviously our desire for you to invest with us helps along that way. In terms of the fund management structure, as Matthew said, we have 4 funds, and these 4 funds were designed to support building and delivering homes to New Zealanders. Is capital availability and being a well-capitalized business allows us to future-proof our pipeline looking forward and ensure that we continue to build high-quality product when, the market is turning out, demanding more and more homes. We're there and able to satisfy that demand. And as the demand starts to alleviate slightly, we're able to continue to build high-quality product because of that capital in the background, ensuring that we have a robust pipeline. We're ready to go in the cycle anytime. We're ready to produce homes anytime. And we really put that down to the 4 different funds: Williams Corporation Capital, Williams Corporation First Mortgage Investments, Williams Corporation Capital Partnership, and the recently launched Williams Corporation Completed Home Fund. Today, we're focusing our attention on effectively the mothership, the biggest fund, which is Williams Corporation Capital.
And I just want to add one thing before you jump into Williams Corporation Capital. Since we have been a property developer, we have never missed a 20th of the month bill cycle. So if you're in the construction industry, builders are notorious for not paying their bills on time. Developers are notorious for not paying their bills on time. We have never been late one day paying our bills, and we've never ever been late with an investor payment, paying them to our investors. So there might have been like a data error where a payment got missed, but as far as like consequential payment on the day, we've never ever missed an investor payment or a bill payment as a property developer. And that's because of these instruments. It's just made us so well capitalized, allowing us to do our job.
Yeah, I mean, thanks for that, Matthew. It kind of highlights one of those really small numbers in that list earlier that you had, which highlighted how large the fund is, over $270 million raised, $36 million in dividend. There's two more numbers which are far, far smaller, which is 0 cents lost from the investor and 0 missed payments. And, you know, those two numbers are as important as those big ones. So I'm glad that you brought that up. In terms of Williams Corporation Capital, the wholesale structure is by way of Class A redeemable preference shares. This is a company. It's searchable on the New Zealand Companies Registry. You can go there right now. You can see who the other investors are. You can know that the product is being regulated in that way. And so we issue these Class A shares, which give you an entitlement to the returns in accordance with the subscription documentation and the information memorandum. It's a 10% gross return annually, which is payable by way of a net proceed as well as imputation credits, given it's a distribution from a company. The distributions are paid quarterly. And as Matthew said, we don't miss the quarter, and I'm really happy and excited every quarter. And in 15 days' time, I get to send out another huge tranche of money to all the investors to say thank you for this quarter. So that's fantastic. Now, the funds for Williams Corporation Capital, and within the subscription documentation, it's very clear what the funds are used for. These funds are only allowed to be deployed for land and property purchase and land property development and the associated costs. And so as we go through a project, we issue a drawdown table to the fund. The fund reviews the progress being made on site and only apportions the appropriate amount of capital to that development at that stage it is. As Matthew likes to say, the walls go up, the money comes in to pay the builders. The roofs go on, the money comes in, it goes to pay the builders. And so once we do the work on site, then we're entitled to draw down on that capital. And that allows the fund to get a really secure position, and it doesn't over-gear itself as the development continues. It's always relative to the amount of work done on site. The second kind of core function within the fund is its LVR limit. And so that means it's not overextended. So the first balance is the drawdown table, which ensures that it's not misplaced in time. And the LVR limit that's put in place is so it's not misplaced by value. And so that effectively says that the fund will not extend any capital beyond 70% of the valuation or the aggregate sales price of the development. So there's always a healthy margin and a good amount of security for Williams Corporation Capital, and it enables the development entity, Williams Corporation Limited, to get on what they need to do and get it done. Now, Williams Corporation Capital is a fantastic investment opportunity, and we're really proud to offer it. We only offer this to persons who qualify as wholesale investors, including eligible investors, or who otherwise do not require disclosure under Part 3 of the FMCA. One of the best parts of the fund, and my job as the fund manager, is paying dividends, as I said. And that's only done every quarter. And I wanted to do more, and the company has always wanted to engage with our investors more. So we provide a really comprehensive monthly update to all of our investors about everything Williams Corporation Capital. It tells you what the business is doing. It tells you what the sales are that month. It tells you where those sales are that month. It gives you pictures of what developments are occurring. It tells you the upcoming open days. We find it is such an incredibly powerful tool to support investors understanding that their investment is building real homes for New Zealanders. And it really provides a level of transparency not seen in the financial product market, in our opinion, where you get access to what is the business doing. You get access to Matthew anytime you want. He loves taking calls. You can always call me. We really want to be transparent, and we are aggressive in that with our investors and the amount of communication that we put out. It's something that I'm really passionate about. And as I said, I love talking about anything. But one of the things I love talking about is what's the business doing at the moment, what's changing in the months ahead, and how we're going to continue to deliver an exceptional home to New Zealanders, an exceptional return to our investors, and overall the business.
Yeah, when I just adding one more point on these investor updates, when I go through the process of an investor looking at this product, every single monthly update that we've sent since the inception of the fund is there. So you as an investor can sit down and say, right, what statements did Williams Corporation make in 4 years ago, and then 3 years ago, and then 2 years ago, then 1 year ago? You can go through these monthly updates and you can see this comprehensive track record of making a statement, doing what we said we're going to do, making a statement, doing what we said we're going to do. They're really, really impressive, and you should absolutely have that as part of your due diligence of this product.
So, and I absolutely agree. I think it's an amazing journey that Williams Corporation has been on as a development company and as a fund structure as Williams Corporation Capital. It's been an incredible journey to see it grow, continue to provide those returns. As Matthew said, it's a fixed 10% return, never missed a payment, never lost a cent of shareholder capital. And the way in which that is done is through transparency, by delivering exceptional products, by working with the market and knowing what the market wants and needs at any given time, and delivering a product that suits. That's the level of flexibility and the level of demand that we have. And so we're able to capitalize on that when we need, and Williams Corporation Capital is the vehicle to allow us to do so. A few bits of detail just to get into this. First and foremost, there's comprehensive material documents that should be reviewed by any potential investor. Those documents are available online. I've got them, obviously. Any client consultant in Williams Corporation can provide them to you. They're happy to walk through the information pack. They're happy to answer your questions. I just wanted to pull up kind of 3 or 4 key elements of the fund to explain it. First up, we've already discussed that these are Class A preference shares in the company, Williams Corporation Capital Limited. Now, the second part of that statement is that these are debt securities, and they're subject to an all obligations guarantee from Matthew personally and Blair, the other director of the company, their personal trust, and Williams Corporation Limited. So when we say that this is Matthew's proudest achievement, is building Williams Corporation Limited and Williams Corporation Capital, he genuinely means it, and he puts everything on the line every single day to deliver that promise.
As does Blair. Yeah.
As does Blair. The second element of that is the security, as we've discussed, is an assigned security. Now, one of the ways in which we assign those securities are either by assignment of contract. So before we settle on a piece of land and we start building a development, we get a conditional purchase of that land, and we may finish the design, we may have a building consent for the site, and we may have sold 10 of the units unconditionally already. Now, those are all assets. Those assets are assigned to Williams Corporation Capital to provide a level of security if funds have been advanced. Once we settle on the land, it turns into a much more conventional security structure, which if you've ever owned a house, you'll know who is your mortgagee and who is your mortgagor. A first ranking mortgage is provided, a second ranking or a third ranking mortgage, or any combination of these, depending on the fund and the debt structure for that development. In terms of the minimum investment term, we've got a 12-month minimum investment term for the fund, and then a notice period following which a redemption will occur. It's important that the fund is tied back to what it's fundamentally trying to do, which is building houses, turning your hard-earned dollars into bricks and mortar to sell to a New Zealander to live in a home. In order for us to do that, we need a minimum investment term, and we need those withdrawal periods so that we can actively manage the cash flow, actively manage our exposure, and ensure, as we said, zero missed payments, zero investor capital lost, and hundreds of deliveries a year to New Zealand purchasers. Now, Matthew, there's a particular part of the fund structure which is unique for Williams Corporation Capital, which is the Class B shares. Do you want to explain a little bit about why they're there and what they do?
Yeah, so obviously, as Richard's already said, we have all of our assets on the line. So you have a personal guarantee from me as an individual, you have a personal guarantee from my family trust, as well as Blair and his family trust. We then have equity in Williams Corporation Capital, in Williams Corporation. So there's a group equity position which is quite large, but this is only part of the group equity position. But we wanted to put some money into this when it was created, and so we came up with Class B shares. And essentially, myself and Blair have put in $5.3 million. We cannot withdraw that money until all of the Class A shareholders have been paid out. And in the event of any loss, that money gets lost first. So it was really, you already have all of the guarantees and everything, but it was us just showing we really believe in this instrument. We believe in Williams Corporation Capital, and we're going to put this buffer in to really protect our investors and to just show that this instrument is a really special instrument, and we'll put our money where our mouth is.
Yeah, thank you, Matthew. That's exactly it. It's an additional layer of security for investors to know that every single kind of security position that can be taken to provide that level of surety to you has been taken.
Yeah.
And there's nothing left kind of to continually improve on and change. It was well thought out when it was first established, and it continues to deliver and do what it needs to do in the market.
It's pretty amazing how well thought out it actually was in hindsight. I sit back some days and I'm like, yeah, that was really well done. Yeah.
That's all right, mate. And as we discussed already, the LVR policy typically represents 100% of, apologies for the typo, of cost. And that's a fantastic way, again, to assure the margins are protected, and the margins can then be used to capitalize the fund again as required. Like any investment, there are key factors associated with this, and those factors represent risks. And we go into those in detail with you as an investor. We want you to explore those with your advisors and your consultants. And we want to be transparent about around what those risks might be. So there is a reflection that this is a risk, this is an investment, and we want to discuss that with you. So please do contact any member of the team. We can explain what some of those key risks are and what we do to mitigate and control those risks in the current market. So who can invest in one of our wholesale funds, and in particular in Williams Corporation Capital? As I've said earlier, this is an offer that's only available for wholesale investors, including those eligible investors. This is not suitable for retail investors, and we don't expect that Williams Corporation Capital will ever be suitable for a retail investor in its current form. The reason why we want wholesale investors is because they can understand the nature of the investment, the risk and return offered, and we want to work with you and help you understand the journey that we're on. Your partnership as an investor coming on board is funding a reputable group with solid management and a really clear vision for delivering a high quality product in the New Zealand market to New Zealand home buyers who love their space, and it gives them a place to, as Matthew said, live and learn and laugh and love and all the other things, where we want people to feel like they are at home. We recommend, as I've said,
Sorry.
that's all right. We recommend that you have the associated material documents reviewed by a lawyer and or your other associate advisors, and we're more than happy to help you on that way to discover the Williams Corporation Capital offering and whether it's an investment that's right for you.
Fantastic, Richard. 10 out of 10 as always. So if this caught your attention, if this caught your interest, Williams Corporation, we're one of the largest privately owned builders in New Zealand. We're building 500 houses a year. We've built 500 houses for the last 2 financial years. We've never missed our bill payments on the 20th of the month. We've never lost $1 of our investors' funds. And we've distributed our $36 million of dividends, never one day late. So really, really impressive track history. We currently have 130 million approximately. Richard wouldn't have the exact number. Approximately 130 million under management.
That's correct.
Yeah, yes, about there. So it's still a large amount of investor funds under management. We are still actively raising capital. So if you are interested, we're still accepting funds. I do believe this offering is so good, there might be a day where we're not accepting funds. There will be a day where we have too much money. So if you are interested, do contact us. What I'd recommend doing is talk to myself, talk to Richard, or talk to your client consultant at Williams Corporation. Get the Google Drive link. So the Google Drive link has the information memorandum. It has all of the supporting documents, the tax documents, as Richard said, risk registers. I always recommend reading all of the monthly updates. I think it's one of the coolest parts of that Dropbox, as you can see every update every month for the last 4 years. Now, in the information, if you wish to invest, we've got 3 pieces of paper you need to sign. Your client consultant or Richard can sit down and do the paperwork with you, or else you're welcome to take that to a lawyer. Now, just correct me if I'm wrong here, Richard. The paperwork is not legally binding. It only becomes a legally binding investment when you transfer the funds. So we set it up that way because we don't want the paperwork to be a stressful exercise. So if you're in a Williams Corporation office and you're interested in Williams Corporation Capital, we can sit down and we can do the paperwork together. It can be really stress-free. And then when you get home, our lawyers will audit that paperwork. You'll get sent a deposit slip if you comply with all the things you need to comply with. And it only becomes an investment when you deposit the money. So essentially, if you have a change of heart, if you get cold feet and you don't want to transfer the money, we just throw the paperwork in the bin. And it just means it's a really easy, stress-free way for you to go through that process. There's a reason we're such a large builder. There's a reason we're such a large fund. It's because we're professionals. It's because we're good at what we do. We're honest. We've got that reputation. So if you have the means to invest in Williams Corporation Capital, we'd absolutely love to have you as an investor. We would love to have you as an investor. That's my summary. So, Richard, what sort of questions have been popping up in the chat? We've been presenting for 33 minutes, so I reckon we could try to do like 7 minutes of questions, 7 questions maybe.
Yeah, well, as we get our team to organize some of those questions that have come up from the live stream, we've got one standard question we always get asked. So I'll ask it to you kind of as a setup.
Yep.
But it's a really good and easy one. Can you explain the difference between why it's a 10% fixed return compared to a 10%, like why is it always fixed? Like why did we make it a fixed return?
Yeah,
a lot of these investment products change their numbers, whereas we have not.
I think it's just about the simplicity. Like 10% is just a nice number. Like when at the time Williams Corporation Capital was created, that was a very low interest rate environment, and 10% was a really strong return. So we aim for a really strong return, but also simple, easy to do the maths, easy to understand. It's a simple, easy investment. That's why we picked that number. And then as the Williams Corporation balance sheet has strengthened, as the company's strengthened, I believe 10% is still a really great return based on the risk profile of the investment. So essentially, because it's easy, it's a good number. 10% is a good number.
Well, and it kind of summarizes that, right? Is part of the reason why Williams Corporation and Williams Corporation Capital have been so successful is we want to make it as easy as possible to understand, as easy as possible to say yes, while at the same time coaching everyone to get their advisors to understand the product. And when they say, oh, it's not as complicated as I thought, the answer, absolutely. We don't need to make these things complicated to confuse you. We want to be transparent, and the easiest way to be transparent is to be really, really simple.
Yeah.
And I think, Matthew, you've said it before. You're a builder.
Yeah.
You have to keep it simple, right?
Yeah, I agree. How good.
So the second one is we're trying to empower. The question here is, would it be cheaper with cheaper debt? And,
Like, do you think they're saying, would houses be cheaper if we had cheaper money? Is that what they're saying?
No, I believe the question is much more geared at why would we have a fixed 10% return when we can get cheaper debt doing something else?
Okay, this is a really good question. I can thrash this out. So there are entities where you can obtain cheaper debt. So there's big international finance companies, funds, etc. Now, what I have found in my career is when I've done business with those entities, they have sort of a stranglehold over the business. They control the decision making. They always feel like they're restricting you down, right? Where with Williams Corporation Capital, we wrote it with obviously clear rules, but we wrote it to allow us to trade, to allow us to do the business. But then it gets better. As of today, we have approximately 280 investors, right? Those 280 people are advocates of the business. They come in and buy houses from us. They recommend their cousin to buy a house. They reinvest their dividends. They're at the bar showing off their dividend that they just got paid. So instead of us just being a line item on some international corporate's balance sheet with some regulator telling us how to do our job, we have these 280 people that love the business, that recommend us, that refer us. It's just been, and I'm not saying that there's not these big international companies that can be amazing to work with, because I'm sure there are, but it's just everything about it's been special. And let's say we pay a premium to have it. Our investors give us that premium back in goodwill and referrals and just, and goodwill. Yeah.
Again, it highlights to me the reason for the success more than anything. Is partially, as we said, it's a simple, transparent structure that doesn't keep you running around the rabbit hole trying to understand it. But the second part is yes, it's a premium that we may pay. We choose to do so because we know that building homes in New Zealand is a relationship business. We want to build longer relationships with our investors. We want people to invest in one of the funds and then buy a house. We want someone who buys a house to then invest in the fund. And we want them, as Matthew said, to want their child, their parents, their friends, their cousins to feel the same way about Williams Corporation that we do. In the same way that we know that Williams Corporation builds high quality products, we want our investors to say the same about that. So that's probably where, it's a relationship business. We
should actually do it one day. You could actually sit down and say, hey, we're paying approximately a 2% premium for Williams Corporation Capital versus getting the money from a big international corporate. And then if you went through all the investors who bought houses from us, who referred friends, I'm adamant if you worked out the economic value, it would end up cheaper. We should actually do that exercise one day. That'd be really, really interesting.
Well, at the heart and the soul of it is it's a relationship business. And so building that relationship, we want you to be part of that as well. We want you to be invested in us as an investment for you that gets a return, but also invested in the company that's building these homes. So that's where the level of transparency, the level of engagement, the discussions, the communication can really help you feel comfortable.
Should we try hit some questions? And we'll try not to run. We'll just go like bang, bang, bang.
All right. The monthly reports. Are these all available? Do you have to be an investor to get them, or can anyone look at them anytime?
We have a Google Drive. It is open to anyone. So all you need to do is message a client consultant and say, can you please send me the Williams Corporation Capital Google Drive, and you will get access to that. You do not need to be an investor to review that. And the reason we do that is, how can you assess the risks and merits of the offer if you don't have the information? So that is available to you. You're welcome to have a look at it, anybody.
And as a follow-up, do we make anybody sign a non-disclosure agreement around the investment, their investment, and what we do?
Because we have nothing to hide.
Perfect. The next question is, can Williams Corporation Capital back other developers or other builders or lend money to other people?
No. So you're actually probably better. Pretty much it can only be used to fund companies that myself and Blair control. Is that correct?
The technical term
What's the
is
technical
correct. The functional reality is no, it can't fund anything else. It's funding Williams Corporation Limited and the associated trading companies that get established to run a development. So no is the answer. It doesn't lend money to anyone else, and it doesn't kind of get involved in other developers and deal with their pitfalls, headaches, delays, or any issues that might arise. It's all for Williams Corporation Limited, all for delivering our product.
Yeah.
I don't have any further questions
Okay.
that have come through. So if that's it, then Matthew, do you want to close out?
Yeah, I'll wrap it up. Hopefully this has sparked your interest. We would love to have you as an investor. We've got so much work to do, and work obviously costs money. So we would love to have you invest with us. I highly recommend getting in touch with someone. Richard's details are there. My details are on the website. Any of your client consultants are trained on this. Get the Dropbox, get the Google Drive, review the information. We can go through the signing process together. We'd love to have you as an investor. I hope you've enjoyed today's presentation. Thank you very much.